Taiwan index that's holding on to gains of 0.6%. On the flip side, we've seen Hang Seng that is a bit subdued in trade.
Support first. It comes in around the 24,400 levels on the downside.
Now the pharma companies, we're Aurobindo Pharma. We're expecting some bit of a green move here.
Absolutely flat, but blinking red and green, 24,765.
Look at the growth momentum in India is clearly slowing.
Nifty is at the day's low right now. It's down around 114 points.
Deposit growth, however, continues to outpace the credit growth for last 3 fortnights in a row.
He's arrived in Chennai and getting the grand welcome that he totally deserves, Vivek.
Bajaj Auto is gearing up for a series of electric vehicle launches.
The GST Council's Fitment Committee has proposed increasing the tax on old and used EVs.
No, mid-cap and small-cap have built onto the gains. The Nifty Bank has spared some of the losses that it saw earlier during the day.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Closing Bell. That was the day so far. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. I'll be shortly joined by my co-anchors. That's Prashant as well as Reema. But for the day, in fact, the Nifty has traded in the red. So we are down close to under 100 points. But I don't think it's at any kind of bother as of now. This is par for the course, the fall that we are seeing. The Nifty Bank is more or less flattish. And still, even with the markets down 100 points, you have the breadth of the market that's firmly in favor of the number of stocks that are advancing. So the crisscross lines should come up for you on the screen. A few stocks that are moving very, very well, particularly in the last few minutes. You have HCC that spiked up to the high point of the day. So let's get that one up for you. Swiggy is another one that's moving well. In fact, let's pull up just Swiggy as well as Zomato. Swiggy again is outperforming what Zomato is doing in today's trading session. But it seems like in a longer term, the street is more comfortable with Zomato than Swiggy. Though Swiggy trades at a big discount. So both of them moving higher. And also Samvardhana Motherson, I recall a couple of sessions ago, we had made this point that there was some delivery-based buying being seen out there. There was, a good amount of long build-up as well. So that stock, midway through the trading session, it's seen a good recovery. And Paytm, who would have thought? Now, 1,000 rupees stock is what Paytm is. So a good move is what we're seeing on that front. From the frontliners, just want to pull up a couple of names. Eicher Motors, that's kick-started its engine. I recall just around an hour or so ago, the stock was down 0.5%. Now that's seen a good recovery in the last few minutes. Hey, guys, good afternoon. Monday afternoon, not too bad.
Not too bad. And I think the indices, the frontline indices, don't tell the whole picture, as you said, Nigel, because broader markets are doing just fine. Reema, hi, afternoon.
Hi, afternoon.
It's looking actually, the broader market breadth is better. Mid-cap index is up 0.5%. The small-cap index, I think, is even better, a little bit more. So, yeah, enough single stock action out there, which I think are keeping everyone quite busy. So, I think in terms of sectors, if you want to take a look at what is doing well and what is doing badly, you basically have metals, IT and energy, which are seeing a little bit of profit booking. And I think with IT specifically, since it's first off the block with results, etc., some chatter in the market that is again going to be a pretty sort of, the indications are not good, at least from 2-3 sort of companies. But this is all chatter. We'll have to wait for the actual numbers, which of course is only going to be by the 6th or 7th of January. Real estate, that's this index which is doing well. Actually, that's the only index which is meaningfully higher with a 3% pop. And we'll get to that in terms of specific stocks, coverage, upgrades, etc. on names like Oberoi. But that's just in a bit from now. Reema.
Well, on Swiggy, I think there is an Axis initiating coverage, and they've put the target price at 600. So, every few weeks or every few days, you've got a new brokerage putting a higher target price on Swiggy, and now it's 600 is what I read. So it's 800 and 8.5% higher on Swiggy, 577. But IT has taken a back foot today. The Nifty IT index is down close to about 1%. There are two sectoral indices which are weak in trade. One is metals and the other one is IT. Metal index is down close to about 1% and IT is nearly down 1%. And TCS, that's the one which is taking the hardest knock. That's down 1.5%. Infosys is down nearly 1%. And Bharti Airtel retraces some of Friday's 4.5% gain. Bharti Airtel is under pressure. But let's find out how you should position yourself in the last hour of trade. Mitesh is now with us for a few closing strategies. Mitesh.
So, early in the day, I was talking about the fact that the Nifty will face a lot of supply around 24,800. And today also, post the opening, 24,780 being the high, we've kind of come off. I still believe that, there will be more time required for the index to gain strength and get past 24,800. So I believe that we are back to this range of 24,500, 800 zone. And buying should be done closer to about 24,550, 540 levels. So that's the way we are approaching on the index. So haven't got a trade till yet. But on stock specific basis, I think a lot of stocks are showing good momentum, good promise, and good chart patterns on the upside. So trading with the long bias, because we believe that eventually the index will also break on the upside. So that's the way we are positioned on the market. On the stock side, Hoodco is a buy with a stop below levels of 252 for targets of roughly around 270. The stock has been showing uptrend and now is showing signs of continuation as it managed to get past the previous high. So look at a target of 270 to about 275 over the course of next few days. And the other stock which I like is JK Cement, which I would recommend buying with a stop at 4,700 for targets of 49.
Okay, Hoodco and JK Cements are two names from Mitesh, which he's recommending at this point in time. Well, let's talk about the big sector, right? I mean, banking, and this is fortnightly data which is come through. And this is data, I think, for the month of November as well. Abhishek is here. I think the numbers are a bit sobering. Abhishek, good afternoon.
Good afternoon, Prashant. So to begin with, whenever or any fiscal, the November end data does reflect the FI data as well, or the fiscal year end data as well. I've checked that for last 3 years in a row, that's been reflecting, and business momentum is softening for the banking sector. Deposit growth is at 10.75% year on year. This is one of the lowest growth that you are seeing in last 9 fortnights. Advances growth is at 10.6% year on year, which is one of the lowest that you are seeing in last 68 fortnights. Deposit growth continues to outpace loan growth for 3 fortnights in a row. The credit deposit ratio remains elevated at 79.5% for the system as a whole, and this is one of the highest that you are seeing in last 5 fortnights. The M3 growth, or the money supply 3 growth, that on a year-on-year basis is at 11 fortnight low of just 10% growth on a year-on-year basis. So deposit to M3 ratio is at 83.25% versus 83.1% that it had come out in the last fortnight data. Now, X of SDFC Limited numbers, the deposit growth is at 11.1% YOY and about 0.76% on a fortnight basis. So it is at a 9 fortnight low with respect to this growth rate. Advances growth is at 11.8% year on year and about 0.9% on a fortnight basis. This is one of the lowest growth rate that you are seeing in last 37 fortnights or even more. The calculation shows that credit deposit ratio might have inched up a bit to 77.7% from 77.6% that it was there in the previous fortnight data. Back to you. Okay, all right, Abhishek, thanks a lot for that. Well, let's welcome Deepan Mehta, Director, Elixir Equities, who joins us on the show. Deepan, what are you making of a bit of a slowdown in credit growth, and what do you like from the banking space?
Yeah, Najal, good afternoon, and thank you for having me on your show. I think that gradually, the problems for the banking industry are slowly but steadily mounting. And first of all, I've always said that now it's a bit of a red ocean with so many banks, lending in the market and also jostling for CASA. So that's getting difficult for the entire banking sector. And then there's a slowdown in credit offtake, and some of the very highly profitable segments like credit card and microfinance, there the NPAs are really causing a lot of trouble, and even RBI wants the sector to go a bit slow. So I would say that banks would like to be a bit neutral to negative on it. And within the banking portfolio, I think the best risk-return profile coming from the PSU banks, where the growth rates and a lot of the other qualitative and quantitative parameters are fast narrowing the gap with the large private sector banks, but valuations are still at a considerable discount. So as a sector as a whole, we want to be slightly underweight to neutral weight, definitely not overweight. And within the sector, because it's a large component, better to be with the PSU banks.
I stand corrected. By the way, Swiggy's target price set by Axis Capital is 640, not 600. They're saying it's second place, but still very much in the race. So they're initiating coverage with a buy. 640 is the target price. They're saying the food delivery Q-commerce business remains underpenetrated. There's a long runway for growth. The company has ambitious store expansion targets in Q-commerce. That should help its gross order value. cost control is moving, and food delivery is a stable duopoly. Dipan, Swiggy, buy at these levels?
Well, we have already got Zomato in our portfolio, so no point having both companies. But yes, if you missed out on Zomato, then definitely you could look at Swiggy. I think the discount between the two is gradually narrowing. But look, quick commerce and food delivery are one of the highest growth sectors within the economy. And where so many sectors are kind of slowing down, you will see a lot of money being funneled into these businesses. There is, of course, the big, big elephant in the room is Amazon, and how their offering, that is Stays, how that is going to shape up and what competitive intensity it will create. That needs to be watched, but there's no denying the fact that these companies are changing habits for which markets will pay a huge premium and create a lot of value for these companies and their shareholders.
All right, Dipan, I wanted to know if you're tracking Page Industries. In October 2022, the stock went, I think, to around 54,000 rupees. And from there, it saw a very, very sharp correction. But now it appears it's gradually pulling back. The stock's at a fresh 52-week high, though it's still around 7-8% away from the highs that we saw 2 years ago. Any view on this name?
Yeah, see, Nigel, I think that again, a lot of competition emerged within the sector, and at the same time, there was a mild slowdown also. So therefore, we saw this kind of volatility in their earnings, and overall growth rates also had slowed down, but we are seeing a mild pickup over there. I would say that it's a company definitely worth watching. We're very positive on specialty retail plays like, say, Page Industries, or Metro Shoes, or Campus Activewear, Ethos. It's a great space to be in because they have a lot of strength and they have scope to expand the distribution network and scale up the business. So I would just say maybe a quarter or two, if the earnings are coming in a decent way and growth rates are back to that kind of mid-teens level, then it may justify these valuations and you can look at the stock in new at that point of time. So I would say right now put Page Industries on your watch list and just wait and watch and see how the next couple of quarters play out for this company.
Okay, got it. Deepan, the next one is Wockhardt. We're going to just talk about, right? I mean, what a mover it has been in 2024. Let's get the latest out. What's the reason for today's move? Vinny is here with that detail. Vinny, good afternoon.
Good afternoon. So yes, Wockhardt has seen a very good move in the last couple of years, and especially in the last year. And this is coming in only after they've spoken about the cancer drug that they've been getting into. Now, obviously, they are in those phase studies going on. They are nearing the completion of this phase study drug. And the positive news today is that they've seen some successful use of this drug, Zynic, which they're talking about, which is the cancer drug. And this is in the US. Now, till now, they have worked on, in the phase trial, 45 patients is what they have tried this on. And they benefited under this compassionate use of the drug, and as of now, positive outflow coming in from this one. So that means we could expect a positive news coming in the phase 3 trial, which is nearing its completion because it's expected in 2025 February. This is expected to get completed. So that is why Wockhardt is in focus today and buzzing on the back of the news floor.
All riding on that one drug for Wockhardt, isn't it? Deepan, any thoughts? Wockhardt?
It's an option whose value keeps on increasing every time there is some positive news flow on the new chemical entity. But look, you can't bet big on Wockhardt. Its business model is clearly dependent, or rather value is clearly dependent upon how successful the new chemical entity is. We've been disappointed with the traditional pharma business, be it the domestic or the exports. Their track record with meeting FDA regulation has not been the best. So, I mean, and its stock has run up also considerably. And it's anybody's guess whether they will be able to launch the molecule and, how successful it does become. And from that point of view, you can make a small investment in Wockhardt and hold for the long term and hope something positive comes out on the new chemical entity. But other than that, I think there are better plays within the pharma space, especially a company like Sun Pharma, which have a proven track record for specialty products. And that journey is going on very well for them. And then I think even Lupin has come around pretty well. And some of the other Dr. Reddy's Cipla also, I think, are good defensive plays in markets like this, in economies which are slowing down as well.
Okay, all right. Deepan, I wanted your view on Stovecraft. Where we have the management of TTK Prestige, Mr. Jagannathan, he joins us quite often. And he's been saying that, there are some pressure signs, but he's optimistic about growth. Now, you have Stovecraft that comes in from the similar space. And they have been ranked underperformers if you look at it from the time of the IPO. They promised a lot, and then they disappointed, so the stock had halved from the top. But as we speak, the stock has moved to the high point of the day, and it will be on a lower base. So it appears they have some headroom in terms of growth, and the management has sound confident that operating leverage will come through once once we see growth. Your view on the stock at around 850 rupees?
Nigel, the same thing, what we saw in Page Industries and some of the other urban consumption stories, that right now that entire segment is under stress. We've seen Storecraft also, they had very good numbers maybe about a year ago or so, good quarterly growth rates. But then I think growth started to flatten out and stagnate. But it's an underpenetrated sector, and with more and more nucleus families, more urbanization, the long-term prospects are phenomenal for companies like Storecraft, even TTK Prestige, which manufacture household appliances and kitchen equipment. So keep them on the watch. The best time to buy would be once you're sure that the company has gone back onto its growth rate, and that will be evident only when the quarterly earnings growth start to move to that mid-teens type of level. Once it reaches over there, that's a good time to perhaps enter companies like Storecraft. But for the time being, I think unless we're not sure of the revival, I would not make any fresh investment in Storecraft.
Okay, could not put more money into Storecraft. Just two other names, and these are all kind of not special situations exactly. Deepan, one is Religare, right? I think finally that Burman takeover looks like it's moving on. There's an open offer pending, and stocks. So it's got that support in that sense. Stocks now finally crossed 300 rupees. The other is ITT Cementation. Here the Adani offer is there, and that support, I think, is about 517, 520 or so is where the open offer will kick in. Any thoughts at all if you own these or track these, Deepan?
Prashant, Religare, I don't know anything about what is happening over there, and that company just fell off the radar because of all its past problems and the new owners. Let's see how it plays out. But there are a lot of other better players in the fintech and financial services play. ITT Cementation, a company in which we and our clients are invested in, and in fact quite pleased that Adani Group is taking over the company. They will have the benefit a lot of captive business as well, and especially Adani's track record in getting business from the governments is phenomenal. So from that point of view, ITT Cementation also will benefit. There's another company, PSP Projects, also where Adani is taking a strategic stake. That's also a company to watch, because infrastructure construction is something which, if it's driven by aggressive management like Adani, then certainly it can scale up very well. And ITT Cementation has got a fantastic track record. They are pre-qualified or able to bid for many interesting and large projects. And I think that the prospects for ITT are quite decent. Valuation is reasonable. But as I said, we have an investment in it, so our views could be a bit prejudiced.
Thank you very much for joining in, Deepan. As we slip into a break, it's time for Growth Code, an initiative by Grow and CNBC-TV18 designed to provide you with valuable trading strategies. This week, CNBC-TV18's Nigel sat down with Vishal Mehta, founder of Market Scanner, to understand the importance of a well-defined strategy for our edge.
Why is it crucial for traders to have a well-defined strategy? Also, what are the risks one should consider before entering into the market?
A lot of people think that to get into a trading, you just need a Demat account and money in your account, right? When it comes to business, or even if professions, right? If you want to become a doctor, you spend about 15 years to study and master it. Engineer, the most important thing in like any business is you have to have a strategy and you have to have a capital. We as a retail trader are playing against some of the largest corporates who are with the best of the minds, best of the execution capabilities. So what is at our end is the strategy, because without a strategy, you are in the jungle and ready to be killed.
Welcome back. We've got the market, which is down about 100 points on the index, but broader markets is where all the action really has been, and that continues to do very, very well. You know, single stocks, and we highlighted so many over the last 30 minutes or so, buzzing around, and market breadth consequently is positive as well. Not by a huge margin, but there is more stuff which is up rather than down. Some stocks at the bottom of the screen, which of course we are highlighting. Paytm back in 4 digits at a 3-year high, you know, one-way kind of move from 350 levels, and remained uninterrupted even when the market fell during from the highs of September. I mean, the Paytm stock barely budged. And is done very, very well for those who bought. Aditya Sood is with us, fund manager at Incred Asset Management. Aditya, good to have you with us here. Good afternoon. Thank you very much for your time. It is, I'm assuming, your kind of market because you're a very bottom-up, purely value investor, and the market is hungry for ideas. So, as we wrap up this year, 24, Aditya. What are 2 or 3 ideas you want to sort of, lay out, and we can sort of dive deeper into those as we head into 25?
Sure, Prashant. Thanks for having me on the show. Essentially, I think so. Rather than ideas, this market we believe is in the middle of a reset. So if you step back and think about it, possibly we have had 12% CAGR of earnings growth for last 10 years. Obviously, COVID being an aberration, and post-COVID, obviously we saw a decline in earnings growth of 25% in terms of the EPS cut, and subsequent to that, we have seen a 25% CAGR in earnings getting delivered over last 4 odd years. Now, in that environment, obviously a lot of stocks did well. As you are aware that we are getting into a phase wherein earnings have disappointed. So our focus in this market is that, if you can identify companies which are at least growing, 2x of the index earnings growth, which is more like, 22% CAGR, it should be a very, very constructive point because, market is going to be earnings growth starved for the near term, at least, next 6 to 9 months. Obviously, this kind of environment creates opportunity for bottom-up stock picking because what we have also seen is that there are certain sectors which were very, very, which had gone through, euphoric valuations, possibly, defense sector being one of them. And now we have seen normalization of these opportunities because we have seen, 30, 40, 50% correction in many names. So in a way, it is very similar. This decline is very similar to what we experienced from 2021 to 23 in the markets. Purely from a bottom-up basis, the way we are looking at this opportunity is that we are trying to identify stocks within sectors that we like, but these stocks should be trading at a sort of a reasonable valuation, and that is fair. For example, hospital as a space we have always liked. We own a couple of hospital names, but within that, I think so. What we are trying to see is that is there a price to value gap? In a very fast growing sector, obviously, wherein margins have improved over a period of time, because we have seen re-rating of margins. For example, a Max, we have seen 88% odd margins moving to 30% plus EBITDA margins over a period of time. So what we are trying to do is that we are trying to resort to this framework of value hunting within that sector. But I must confess that there are opportunities wherein if you are investing into very high capability companies, these companies are expanding their total addressable market and earnings are also, growing exponentially. Obviously, some of these areas are, telecom equipment manufacturing in India or the manufacturing ecosystem, be it, EMS companies. So we are very, very focused towards the earning growth in this environment.
All right. Hi, Aditya. Good afternoon and good to see you. When I think those 2 calls, Indraprastha Medical Corporation and even Healthcare Global, both of them worked quite well for you. But I think you're indicating that there is further upside.
Even Tejas Networks. Aditya has been very bullish on Tejas Networks. So when he talks about the telecom equipment, I think it's Tejas.
Very good. Aditya, we're almost at the end of 2024. Some of these names have done well. We were just, talking about Stovecraft with Deepan earlier, and that's another one that you'll have in your portfolio. Give us top 2 themes for 2025 that you're looking at, stocks that can do well?
So theme number one is that, when we see a headline or when we see a headline in a sector, and Stovecraft being a perfect example, our focus typically is to focus on companies whether they can gain market share in a declining market. As long as companies can demonstrate that, and this is what we precisely saw in the case of Stovecraft as a case in point, 385 rupees was the IPO price. 4 years back, the stock rallied to 1100. Again, the stock declined to, from 1100 to 400, which was a very, very sharp decline. But what we saw was that, they were consistently gaining market share. Now, if you look at, Stovecraft as a play, our belief is that, export is going to emerge as a very, very big opportunity for them. They already have, for example, they already have both Walmart and Asda, which is a Walmart subsidiary in US, as customers. I think so. They potentially can half of their revenue, what is today, could be coming from, in terms of incremental growth, can come from exports. They have heavily invested into gross block. So we like companies wherein they are past the capex phase, and then you would see a ROC improvement going forward. As far as Indraprastha Medical is concerned, I think so, when a growth stock becomes a value stock, essentially over a period of time, what we have seen is that, virtually growth was missing for this company. 755 bed capacity they had for the longest period of time. I think so now they are getting into this capex zone. But the key that needs to be noted there is that it is one of the highest ROC hospital possibly in the world, 35% return on capital employed with 18% odd margins. We believe that the margins will trend towards, more like 20%. And then over a 5-year period, they can easily expand to, 755 beds can go to 2000 beds. Now, what it essentially means is that, this 180 crore profitability that they are reporting could be easily a 400-500 crore number over 4-5 year period. Valuations are reasonable. The stock is trading at 23 times earnings. If you look at the PE multiple of the sector, hospital sector, as you are aware that, most of the hospitals are trading at 40 to 50 times trailing multiple. So we believe that, this is a very constructive value play. On Tejas Networks, it is a story of capability, and that is what I have always believed. I have not stumbled upon a small cap in my career, wherein you have got 450 patents to its name. So it is a very highly intellectual property guarded company. That leads me to also believe is that, for example, 6 months back, nobody would have thought that Tejas would have any role to play in Railway Kavach. So first, if you logically think about this, is that, this was a fiber to home wireline company. Obviously, BharatNet is something that, is very widely spoken about. But wireless is something that Tejas had never implemented in their, they had done a $10 million project for a Malaysian telecom in the past. And now they've successfully implemented the BSNL 4G, 5G implementation. And that is the reason why we are seeing, so much of subscriber addition. Nobody could have forecasted that, they would have a role to play in BharatNet. I think so. The total addressable market in the case of Tejas is expanding at a very, very rapid pace. It takes a lot of time for, most of these companies to build capabilities. Today, possibly, Tejas is a 28-year-old company. So first 25 years, they were busy, in terms of having, closely guarded intellectual property. So I think so most of these names have a long way to go from here on.
Aditi, you spoke about healthcare, hospitals in particular. There have been many recent IPOs in the allied healthcare space. So there was IKS, Suraksha, a diagnostic company focused particularly in West Bengal. Then you had Sai Life Sciences, and then many others like a MobiKwik, Vishal Megamart, not in healthcare, but recent IPOs. Anything which you all are interested in, where you see value?
So one of our framework says that, possibly the best stock that you own is already in the portfolio. So if I have to compare, Sai Life Sciences to Newland in terms of, valuations or in terms of capability, I think so, we already own Newland, I think so that is a stock wherein we are fairly constructive on. Versus a Suraksha, we own Thyrocare in the portfolio. We believe that, Thyrocare over the next 2-3 years could be the fastest growing, sort of play on the diagnostic side. The problem with IPOs generally is that, is that you don't know the character of management when the companies are coming for an IPO. Very limited history of, management teams, how they react to, public listing is unknown. Second thing is that, most of the IPOs are bought based on, obviously projection. And our view is that, IPOs only happen when business is doing well and the market is doing well, which is typically a boom phase in the market. So we would like to, do wait and watch. We study these companies well, but we are not really, too much inclined towards, IPO investing.
Aditya, what is Tejas? So if you had to put fresh money, if you did not own the position in Tejas you do now, and you to buy it now, would you do it again at this price?
So two rules that we use, Prashant, religiously is that, how is the risk to reward incrementally? Because PMS as a product, as you're aware that, we have to think about, incremental deployment. So that is point number one. How is the risk to reward incrementally? Second thing is that, whether we can incrementally make a 20-25% IRR on, the money which is freshly deployed. I think so clearly, Tejas qualifies. When Tata's took over Tejas, the open offer was made at 280 rupees. One of the things that we have to be mindful about is that when a corporate change event happens in a life cycle of a company, anybody who's stepping in as a new promoter is not buying the company to make a 3-5x. Possibly it is making, it is investing to, get into the company and make a 30-50x over a period of time. Now, time horizons could be different, but my view is that, Tejas is going to be the best manufacturing play that comes out of India for the next decade.
Wow, that's good to hear. Aditya, you also briefly mentioned EMS and stocks are jumping. The Keynes is higher. There is that OSAT excitement around it. CG, of course, is not doing very much, but Dixon, I think, of course, that tie-up, another tie-up there. PG Electroplast is sharply up. What do you own in that space? And again, I was looking at numbers. Maybe numbers are going to be rapidly revised, but Keynes is now, I looked at, I think, Spark Avendus estimates, about 110 times earnings, FY26 earnings. Just any thoughts here, Aditya?
So we are, very, very conscious about, the valuation that we, buy into the companies, So there is a company known as Centum Electronics that is there, a part of the portfolio. So if you look at, if you do a, the first point in EMS is that, what is the real capability of a EMS play? And for that, essentially, you have to look at the certifications that, a lot of these EMS players have over a period of time. Now, you will be surprised that, very few companies would have a NADCAP approval, for example, as a case in point. And Centum happens to be one of them. The second thing is that, which is the sectors wherein, these companies have an exposure. Why we saw a very large rally possibly over the last 1 month in Centum is essentially because, they've got exposure towards defense as a play. So we like companies wherein, aerospace and defense could be a real EMS play over a period of time, but because, we are focusing more towards, IP protection and scalability over a period of time. But again, one has to read between, there are between circles, and one has to focus on, capability and when that product life cycle coincides with, revenue generation. Another aspect of EMS, evaluating EMS plays is obviously, the inventory cycle, because a lot of these companies, and for example, anybody who's working in aerospace and defense would have a MOQ, and that leads to a bloated inventory cycle. But once you see these products getting commercialized, obviously the margins are very, very high. And as a result, it has a very significant impact on return on capital employed over a period of time.
What approval was that, Aditya, you mentioned? That most
NADCAP.
companies... What is that?
So that is a approval that you need to have if you have to, for example, supply to a Boeing or a Airbus.
Okay, which Centum has and many others don't. Got it. And Centum, by the way, I think about 14-15 months the stock did not do anything, and December has been very eventful. I think it's up 35-40% so far this month. So you got in recently, or you've been holding it for a while?
So we have been holding it for like six to 9 months. So one of the frameworks that we have is that, a sector which is very, very hot and valuations are very, very elevated, we'll try to see a differentiated play, but valuation is something that we won't typically end up, compromising on.
All right, great chat, Aditya. Thank you very much for explaining all of that and your thought process, your ideas, and if you don't speak again, have a good end of the year if you're taking a break. Appreciate it, and we'll speak again soon. I think 100 points lower on the Nifty still, 24,650. That's not changed, although broader markets moving around quite a bit. Now, sources tell CNBC-TV18 that the GST Council is set to offer relief to auto companies on their SUV portfolio. It is also likely to propose rate cuts on gene therapy, fly ash bricks, and fortified rice. Timsy is here with details. Timsy.
That's right. There's a lot on the plate of GST Council when it meets on 21st of December in Jaisalmer. Top will be a clarity that is likely to give relief to auto companies. Here the relief is that 22% cess which was levied on utility vehicles having a specification of 1500 cc, 400 mm of length and 170 mm of ground clearance. Over there, the clarity had emerged in 50th Council meeting that 22% cess to be levied. And this, now the council is going to re-clarify that this levy will be only on or after 26th of July 2023, and any claims that have been raised for the past, if approved, then this clarity will put them to rest, because it is learned that many state and central GST authorities have issued claims notices to auto companies for past dues, and once cleared, this will put to rest all those notices and claims. Apart from that, the council-nominated fitment committee has made certain proposals, which includes reducing rate on fortified rice kernels from 18% to 5%, to reduce GST on gene therapy from 12% to nil to give affordable medical treatment. Also, the council is going to discuss on the GOM on revenue analysis, where it says that it is likely to seek a closure of this GOM, which has been in existence since 2019. The council nominated GOM on compensation cess is likely to submit a status report seeking a 3-month extension. Apart from this, other items include fast-tracking the appellate tribunals by giving clarity of rules and procedures, clarity for online services sector, registration categories could be proposed in the upcoming council in terms of a concept note, where they could say that allowing ITC based on risk profile should be considered. A concept note will be prepared and shared. Also, mandatory signature on e-invoice is likely to be proposed. Let's see what all gets approved. Back to you.
Thank you very much, Timsy, for that. We'll get into a break. We'll come back with a few technical calls. PTSD calls coming through.
Welcome back. Well, from the broader markets, a few stocks have really taken off. Just take a look at Swiggy now. Now it's up close to around 11%. Blockbuster move is what we're seeing on that one. So good up move. Enviro Infra as well. If I'm not mistaken, from the time it's listed, the stock has doubled from the IPO price. There could be an element of free float as well out here, but that stock clearly is moving very, very well, currently at the high point of the day. Let's get in Mitesh back with us. Mitesh, what are your trades you have for us at around 3:15?
So, Nigel, after a long time, an FMCG stock, Marico, I think, is closing near the day's high. So, keep a stop at 640, look for a target of 655 here. Showing signs of reversal after, going through a severe correction. So, the good chance that this stock will work well. The other one is from BTST on MFSL with a stop at about 1142 and a target of around 1165.
Okay, those were some BTST calls. Let's get you a CNBC TV18 exclusive now. Parikshit is joining in now with details on Bajaj Auto's EV game plan. Parikshit?
Well, Bajaj Auto is targeting selling 500,000 electric vehicles in FY26 and more than that as well. Rajiv Bajaj, in fact, told CNBC-TV18 exclusively that the company is likely to exit FY25 with a capacity and sales run rate of 40,000 cumulative electric vehicles per month. The company has new electric three-wheeler launches, including an e-rickshaw on the anvil in the coming months, and these will significantly bolster sales volume. We will, in fact, see a lot of action starting this December and in the next quarter as well. Sources tell CNBC-TV18 that the e-rickshaw will be launched in Q1 of FY26. In fact, Bajaj Auto is likely to launch a new brand for electric three-wheelers. All new electric three-wheelers will have the new brand identity. Sources also add that the company will launch 5 new electric Chetak scooters and 5 electric three-wheeler passenger and cargo vehicles in the coming months. A new Chetak scooter is being launched on the 20th of December this year, which sources say will have a bigger battery, higher range, more features and better performance than the current Chetak lineup in the market. The production capacity of Bajaj Auto is being ramped up to meet electric vehicle sales target of over 5 lakh EVs in FY26. Bajaj Auto has sold a total of over 1.7 lakh electric vehicles across 2- and 3-wheeler segments. The company has emerged as the top electric two-wheeler maker in December, displacing Ola Electric.
Thank you very much for that. Moving on to Oberoi Realty, because that's in focus. There was a positive brokerage note from Avendus Spark. Sonal is here with more. Sonal.
Well, there's a very bullish note coming in from Avendus Spark on Oberoi Realty, and that's why that pop on the stock today. They have upgraded the stock to a buy from a sell, and there's a massive increase in the target price as well to 2,700 from 1,600 earlier. They say the stock is offering a blend of safety and growth as well at current levels, and this is supported by robust cash flows and balance sheet strength as well, which they are seeing in the real estate player. There has been underperformance over the last 3 years. That is because there were no big new launches that the company had, and also because the pre-sales were quite steady and not seeing a lot of growth for the company overall. But now they are expected to touch levels of 10,000 crore rupees by FY27, which is currently at around 4,000 crore rupees, so more than double in next 3 financial years itself. FY25 especially is an inflection year for the company, driven by the start of its new launch cycle and multiple projects lined up as well. There's some in Thane, and they have spoken about new project launches across different geographies as well. In fact, in the annuity segment as well, there are 2 important projects which will commence operations. That will start flowing to the PNL as well. And that is something that Avendus Spark is very bullish on. They expect Oberoi now to outperform the top tier listed peers with 3 times growth in launches and pre-sales. And that is what is making them very bullish on the stock.
Okay, all right. Sonal, thank you very much for that. Well, Anand Tandon is now with us to take some questions as far as markets go. Which are still sulking, at least at an index level. But, I mean, as we've repeatedly said, the action is all as far as individual stocks and sectors are concerned. Swiggy is the top volume-led gainer now, by the way, 8%. I think from the IPO price, from the listing price, actually, it opened at 420 bucks. It's now moved up to about 600 rupees or so. That day, it fell to about 391. So that's a very, very nice catch-up. And in the same period since Swiggy has come to the market, okay, I think so. Swiggy's up 13, beg your pardon. I think I have the rate wrong here, at least on my screen. It's 606, 607. So that's a 14% move, my God. And is by far the biggest volume-led gainer that we have on our hands. Since listings, Zomato, of course, has been pretty much there while Swiggy is doing all the catch-up. Anand, I think we've spoken about quick commerce, etc. earlier, but this is, you can call it relative valuation catch-up or whatever. Big gains, though.
Oh, absolutely. I think, the market is actually viewing it as perhaps, taking away a large share from the regular retail and probably therefore having a very large market that they can extend to. And given the fact that the platform companies have been able to raise platform fees and various other charges, they are beginning to show signs that they will be able to make it profitable. I mean, there may be issues in terms of valuations, but right now I don't think the market's looking at that at all. So it's simply a question of can you sustain, and therefore can you capture more and more of the market. And both these companies, in particular Zomato, but also now Swiggy and perhaps some of the others will also be coming in. I think the only warning sign right now is the fact that there's going to be a lot of new players who will soon get listed or who are already gearing up for quick commerce, and therefore competition may increase. But I don't think that the market is worried about that just yet.
Hi, afternoon. There's a brand refresh for Max Financial, and that stock is up close to about 2%. Is it material? How would you view this development?
Well, I mean, theoretically, there is not much that will be gained other than the fact that, as you said, there will be a new brand that may help. But, the bank was already pushing it. They had already taken a stake in it to the extent that the consumer may actually now feel that it is a bank and therefore, or a bank subsidiary, therefore they may, actually go out and be a little more positive towards it. But by and large, the sales numbers for Max have been very good. The agency has done an excellent job, network that they have. So I don't think that there will be a major difference in terms of the client acquisition pace or the volumes that they can achieve. But overall, it does help to clarify some of the different brands under which Axis is operating, and unifies that to that extent. Perhaps to some extent, Axis's own sales force may be a little more motivated to sell it now.
That's a different perspective on the entire issue, right? I mean, actually, it's true because, when you speak to, one of the large banks which doesn't sell their own insurance subsidiaries products, I mean, it's actually a flex for them. They say, well, actually, our clients don't see us as conflicted. So yeah, I mean, that's an interesting point. But Anand, anything else in terms of single stocks, ideas popping up on your radar?
Well, I mean, we are into travel season or holiday season, so many of the travel companies are doing well, especially the newly listed platforms. Some of them like Ixigo or even TBO Tech, etc., have done reasonably well, and I would argue that perhaps more wholesale than retail. I personally prefer a TBO to the other one, but those kind of companies have perhaps again some way to go because you have a lot of aggregation that you can do. It's a very fragmented market. So from that perspective, again, leave valuation aside, I think the market size can be quite large if these companies are able to expand. More importantly, some of them are now getting into slightly more higher margins than just booking tickets. And that itself is also somewhat interesting. And many other things related to travel, I think, have been doing well for a while, but are likely to continue at least for the next few days, next few months. And, other than that, there are selective stocks that you can always look at. Some of the super specialty chemicals have not been doing much, have suddenly woken up. But those are more, there's no particular theme to it. It's more a question of where the capex has been done, and perhaps their companies are now coming into production, etc.
Okay, all right. Anand, request you to stay with us. Before we slip into that short break, just want to focus on a few stocks that have bucked the trend. PG, Electroplus, the stock is moving on very, very large volumes. So yes, Dixon is up close to around, I think, 5% odd. PG, Electroplus now is up close to around 10%. So big move out there. You have AGI Greenpack. That's another stock that's really spiked up. And a stock we were discussing earlier with our guest was Stovecraft. Now the stock is up close to around 8%. So Aditya Sood had a word on it, and even Dipan, he had told us his view on the stock, currently spiking up to the high point of the day. Time to slip onto a short break. On the other side, we'll continue our market chat with Anand. Welcome back. Well, you have a couple of these stocks that are lower in trade. You have Titan and Hindalco. Both of them are a little bit lower in today's trading session. And the tech pack itself has seen some money coming off the table. Anand Tandon is with us, though. Anand, one of those sectors that's had a very, very miserable 2024 has been the cement space. Pricing never picked up all through the year. And demand as well was hit. But one will say that there was various one-offs. State elections, you had the general elections, you had the monsoon season as well. But some part of the street believes that spreads are improving, so 2025 will be better. What's your take?
Well, I don't think that there is any structural change that has happened as far as cement is concerned. The basic problem remains overcapacity. All the companies are expanding far faster than the incremental demand, and therefore there is surplus in each region. And while there is the only thing that will be the saving grace for cement is the fact that there is greater consolidation within each of the cement regions, and as a consequence, the cartel has become strong enough to be able to maintain some of the prices. But you are not able to raise the prices enough to be able to get an economic return on the capital invested. I think it will take a few more years before the number of players comes down even further, and you then have a situation where each sector has only about 3 players. That's when you may be able to get some upside, especially if limestone capacity becomes exhausted. But in the near term, I don't see that happening. Most companies are operating at 70% or thereabouts. You have to be way above that to be able to make economic returns. So if you are looking at cement, you have only 2 plays. Either look for something that is going to be bought out, or look for something which is trading at 80% capacity utilization or higher.
Any thoughts on, have you tracked Wockhardt? All bets are on that one cancer drug, right? Phase 3 trials are on. Typically success rate, because drugs get whittled down and thinned out phase 1, phase 2, and those that reach phase 3, hopes rise quite a bit. And could be a big blockbuster for them if, of course, it comes through and then they've got to apply it to the FDA for approval, etc. That's a 25 story. Any thoughts here, Anand? Wockhardt?
So like you said, the problem with having a few drugs in the pipeline is that you don't have enough, that if one of them goes sour, and they do, even in the last stages. We've seen, earlier you had Reddy's and Sun also doing their own research, and finally they had to either move out or license it out. Glenmark had to license it out. So most of these companies find that after a point, they are not able to grow it substantially. That is true even in the US. If you see most of the drug innovators, they are actually, the smaller ones especially, they end up giving out the licensing to somebody else and trying to just get the license fee right now rather than trying to take it to market. A couple of candidates, I don't think you can really take a bet. It will be one-off. It could be that, yes, it becomes successful, in which case there can be some significant upside. But the higher probability event is that, even if it does become successful, it is a marginal success and it doesn't really move the needle beyond a point. So just purely taking a bet on that, I would be a little hesitant. You have to look at the overall portfolio. I haven't followed Wockhardt closely enough to be able to comment on where the valuations are for now. So I would still, if you're looking at pharma, just go with the regular theme, which is to find companies which are able to supply to the innovators in the US and continue to grow the domestic market.
Okay, all right. Anand, stay with us. Just coming back to you, the market's closed and not very different from where we've been, at least on the Nifty for the last couple of hours, which is the Nifty down about 100 points, 120, 24,647. Nifty Bank ending down about 0.18, 53,489. But the mid and the small cap indices did well. Somehow feels like a much better session. But 1,300 up and almost 1,200 down. So it's not as if the advance decline ratio was hugely in favor of what was higher. But you had lots of well-owned mid-caps and small caps which participated on the upside. Some of the high flyers and high-profile names like Swiggy also kind of adding to the shine in the broader market. And I think that's the reason why it just feels like a good session. Swiggy finally ending about 12% higher.
Well, you had Hutco, that was up close to about 5.5%. Nykaa was a big mover. Z Entertainment gained about 2.5% in the mid-cap pack. On the way down, Nalco under pressure, NTPC Vedanta weak in trade. In fact, the entire metal basket was down nearly 1%. The other sectoral loser was IT down 3/4 of a percentage point. On the way up, Realty did well, 3% gain on that. We're going to wrap on closing bell, but don't go anywhere because on the other side is Markets Forward.